right, Conrad, let's forget about monetary policy for now and look at politics. French President Macron's key proposals to move forward with European integration and a global power Eurozone sounds like a clear and ambitious plan. But is it good music in the ears of other key political leaders in the region and, of course, the investment community there?
You can find very mixed feelings among, pundits, experts, and also people in the financial world about Macron's proposals. While everyone in Europe was so relieved when Macron became the French president, when he prevented the right-wing, xenophobic, retro-looking Marine Le Pen of the National Front to become president of France. Everyone was happy in Europe. Now the same people find it very, very difficult to follow his ideas for Europe. The problem is that most politicians focus on a national electorate. They want to talk to the hearts of people who like their nations, their little Germany, their little France, their little Austria. And for those politicians, it's very difficult to talk Europe and to convince people that it's a good idea, or it might be a good idea, to lift more power to the supranational level to Europe. Among financial people, there is a bit more understanding. I would say that it's a good idea to make Europe stronger, but there are many doubts among German pundits whether creating a finance minister for the Eurozone or creating a European budget should be the first step here. Many people say we should think about first and discuss how responsibility, accountability will really be managed in future in Europe before new institutions like a EU or Eurozone finance minister will be put in place.
Well, we'll watch and see how Macron's ambitions sail through. Well, at the beginning of this week, the Brexit talk came back. And I remember I told you that we're going to discuss that in the course of the week. Now, what would be the key deciding factors for European financial firms when Britain officially leaves the Union, even as the Bank of England sounds upbeat about more influx of EU firms looking to operate from the UK?
Well, for banks from the European continent, it will also be very, very important to keep access to the United Kingdom, just as, of course, the banks in the UK are very eager to keep their passport rights, the rights to do business here on the European continent. It's clear that even after the Brexit, London will remain one of the world's most important centers in the world, financial centers in the world. I'm sorry, that was my phone ringing. I have to switch that off. Now, it's clear that, London will remain a very important financial center in the world. That's where the money is, and that's why the German banks will try to keep their access to the London markets and to the London sources. They do this by applying for licenses, bank licenses in the United Kingdom, and they're doing this up to a certain extent by establishing parallel structures. Deutsche Bank recently said that it's establishing operations in both London and Frankfurt for the same business, just to be sure that they can have the access they need to the resources and that they can serve their clients well even after Brexit.
All right, thank you very much for those updates there, Conrad. Enjoy the rest of the day, and I hope to see you tomorrow. We move on now to the U.S., where the stock index futures pointed to a slightly higher open as investors continued to digest comments from Federal Reserve Chair Janet Yellen and looked ahead to new announcements on tax reforms. Our Federal Reserve Chair Janet Yellen said on Tuesday it will be imprudent to keep monetary policy on hold, waiting for inflation to reach 2%. The quiet, hawkish remarks sent the dollar and U.S. bonds higher as investors grew confident of another rate hike in December. Meanwhile, investors will be looking for details from U.S. President Donald Trump, who is due to speak on his plans for tax cuts. The much-anticipated tax reform package is expected to be presented during a speech in Indianapolis at 3 p.m. Eastern Time. On the data front, there will be durable goods and pending home sales figures out at 8:30 a.m. and 10 a.m. Eastern Time. Those futures numbers there looking all green. We move on now to Asia, where Greater China markets backed declines in most of the markets there to post slight gains in midweek trading as investors digested Federal Reserve Chair Janet Yellen's overnight speech and as North Korea tensions took a backseat. The benchmark Nikkei 225 slid 0.31% despite the weaker yen as most automakers, financials and trading houses pulled back. Across the Korean Strait, the Kospi closed lower after wavering around the flat line. The index finished the session 0.07% lower. The Australian ASX 200 came under pressure. The index slipped 0.12%. Greater China markets posted moderate gains. Hong Kong's Hang Seng index rose 0.36%. On the mainland, the Shanghai Composite inched higher by 0.06% and the Shenzhen Composite advanced 0.776%. And to other market-related news back here in Africa, South African lender Capitec Bank has reported a 17% increase in half-year earnings on steady client number growth. The lender, which has grown rapidly in the past decade, said headline earnings per share rose to 1,769 cents in the 6 months to end August from 1,517 cents a year ago. Client numbers increased to 92 million, which represents a growth of 106,000 per month over the past 12 months. Capitec shares have rallied 30% this year, helping the bank overtake Nedbank as South Africa's number 4 lender in terms of market value. Now, here in Nigeria, proceedings in the Treasury bills market were broadly bearish, with average yield expanding by 4 basis points to 17.41%. That's on a day the central bank decided yet to leave interest rates unchanged. However, investors in the bond markets were bullish, with average yield contracting by 7 basis points to 15.99%. Now it's the morning after the rate decisions. Let's see how the fixed income market is trading. Constance Onya, dealer with Diamond Bank, joins me now. Good afternoon, Constance. Thank you very much for joining us.
Good afternoon.
Now, it was a do-nothing decision yesterday after the MPC meeting. How is the fixed income market trading that decision a day after?
Okay, the bond space has been bullish. Afterwards, we still see rates crashing on the bond market, but the Treasury bills market has been bearish. We'll see the mid and long tenor bills inching up as high as 19%. And this is due to the fact that OMO has been consistent in issuing 90 to 190 days bill. But on the long end, there's still the bullish interest as yields on the 364 days are trading at about 16.2%.
All right, I guess there's a bond auction today at the market. What is the expectation in terms of liquidity?
Okay, right now liquidity is short of about 193 billion, but we're expecting maturity tomorrow of Treasury bills of about 123.52 billion. And TAC has also been approved of 468 billion. All this will hit the system in due course. The bond market will just close slightly at about 15.8 level on the 4 years, on the 10 years, and on the 20 years. Currently, they're all trading below 16% at about 15.89, 15.9, and 15.9 across those maturities. So we see them closing a little bit lower.
All right, thank you very much for your time, Constance Onya, fixed income dealer with Diamond Bank. We'll take a quick break, and when we return, BAIC expects first vehicles to roll off its South Africa's assembly plant early next year. Details in a moment.